Alrighty, it was another crazy day today. We had the son of David DePape, the alleged attacker of Paul Pelosi, come out and say that his father's innocent and that he was probably invited over to the Pelosi home to engage in some sort of sexual activity and was even potentially Mr. Pelosi's sex slave. And I have to say that's quite the headline. It was, of course, a Daily Mail exclusive interview. They tracked down this son. He's 19 years old. DePape is 42, so he's a pretty young guy probably when he had, what would that make him, like 20, 24, 25? That's actually not that young to have a kid, but anyway, it's young by today's standards. People seem to never have kids until they're like 40. But anyway, it sounds, pretty startling. Hey, the son says that his father was actually Paul Pelosi's sex slave. Well, it turns out he hasn't seen his father in many, many years. The article doesn't say how long it's been exactly, but it's been quite a while. And he just doesn't think that his dad would do something like that, which, to be honest, that's what you hear every time that there's some high-profile crime. You hear a lot of family members. They usually don't come out and say, yep, we were just expecting him to do this, because then you look bad. You always say, oh, we never thought that he could do something like this. He said his father was depressed and he was a sad person, and that this just, it's not his MO. And, I have some respect for the kid doing that. If my dad was charged and pled guilty to, assaulting someone, I'd feel the same way. And I do certainly have a lot of reservations about the alleged Paul Pelosi attack. The official narrative, frankly, is not even clear at this point. They've changed the story so many times. I don't know what the establishment really wants us to believe about the Paul Pelosi attack. But the family of this guy, David DePape, they're all a bunch of weirdos, and I don't think that any of them are particularly credible. This son of his bears neither the last name of his father nor his mother. He bears the last name of a completely different family, and no, it's not because he was adopted. His mother just decided that that neither of them were worthy of having a child named after themselves, and so she named him after some other family that she knew. These are bizarre people. So I don't want to put too much stock in what any of these Berkeley weirdos have to say. So, moving on from the Paul Pelosi attack, we are seeing more fallout from the Fed in their decision yesterday. The European Central Bank, led for some reason by Christine Lagarde, who is a completely, incompetent Eurocrat. Actually, she's beyond a Eurocrat. She's just a globalist bureaucrat. She's been in all sorts of institutions. Like, I think she was the head of the IMF. She's not like a smart economist or anything. She's not politically savvy. She doesn't come across well on TV. I really don't understand how she keeps getting any of these jobs, because she has no strength, and she just keeps failing upward. It's remarkable. She was a terrible, from what I recall, a terrible finance minister in France. There was nothing remarkable about her in any way. But I don't want to talk too bad about her, because she hiked rates today, and she said, just like Powell, she said, hey, you should be expecting more rate hikes on the way, because we ain't done yet. And in fact, she basically was taunting the press and saying, oh, you're worried about this 50 basis point hike? Well, guess what? There was a lot of people in that committee back in that room who wanted a 75 basis point hike. You're lucky we only hiked 50 basis points. So, whenever I see central bankers being hawkish, I do applaud them. Even though this is not how I want it to happen, they are they're at least moving in the direction that I want to see things. Even though I want to see the market rein in interest rates and, reinvigorate savings, it's still better. If we're going to have central banks, I want to see them be super tight. And to be clear, neither the ECB nor the Fed are super tight. There are no Paul Volckers in the room. There is no 20% overnight rate. But we also got some economic data today. We got jobless claims as well as retail sales. Now, jobless claims came in lower than expected, which is bad for Wall Street, and retail sales came in also lower than expected, which is bad for Wall Street because both of those, less retail sales means that companies traded on Wall Street are making less money. The economy is slowing down, but people not getting laid off means that the Fed is going to pivot later than they otherwise would have. The faster that the unemployment rate rises, the quicker you're going to see the Fed pivot. If unemployment is kind of sticky downward, but the rest of the economy is crashing, the Fed is more likely to keep hiking, or even if they stop hiking, to wait longer before they start cutting. And when they do start cutting, they may cut at a slower pace. That's why if you're Wall Street right now, you want to see unemployment go through the roof, because that means that the Fed's going to pivot. If unemployment was higher than expected, today might have been a better day for the stock market. But instead, we see the S&P just slough off another 100 points. It's down almost 1,000 points from its peak. It was 48.18, I believe, is still the all-time high. We are down to 38.95 last I checked. Now, in my opinion, I think that we're going to have to see the S&P probably fall 50%, like down to 2,400, in order for it to really be an effective, well-priced market. The bubble has been that big. In fact, I think that if market cap to GDP was going to actually revert to a more normal bottom, like for a recession, we'd fall more than 50% from the all-time highs. We would fall probably below 2,000. I don't know if the Fed will let it get that low. I don't know if the Fed will be able to keep it from getting that low once it starts really crashing. I mean, we're only down 1,000 points right now. Even if the S&P falls 1,000 points from here, that's not wiping out that many years of gains. Remember, the current bubble started in March of 2009. That was the bottom of the last crash. It has been straight up since March of 2009. That is going on 14 years. Okay? And in March of 2009, I didn't look up the chart. I should have looked up what market cap to GDP was. It was either 50% or 75%. Might have been 50%. And at the peak, I mean, gosh, were we close to like 200%? I stopped looking at market cap to GDP after we broke 150, because 150 was so insane to me. The numbers meant nothing to me at that point. Once market cap to GDP broke above 150, so I don't even know where the peak was. The peak might have been like 175. And so 75% market cap to GDP would only be, a 50% crash from the 150% level. And so there is a chance, if we have, a normal reset of the stock market, that it falls well below 50% of its all-time highs. The odds of that not happening are based on how soon the Fed pivots. How soon the Fed stops hiking, one, and starts cutting, number two. And then three, how fast they cut rates. Not to mention restarting QE, because we are currently, I forget what the pace of QT is right now, but QT is going on. The Fed is letting assets roll off its balance sheet, and those assets are entering back into the bond market. Now, in the case of treasuries, that's not necessarily a bad thing, because treasuries kind of are used as a currency or as an instrument for leverage. And so for the finance guys, they might be happy to pick up the treasuries from the Fed. Now, mortgage-backed securities, less so. The Fed letting mortgage-backed securities roll off its balance sheet, nobody, people are not, there's enough of those. People don't really need more of them. So that is just going to help push down real estate, which, frankly, it could use some help being pushed down. Real estate is still insane. They are building countless apartments. I mean, I wouldn't be surprised if the population, around me, if the number of housing units, like in my zip code, or the 2 zip codes like around me, hasn't doubled in the last couple of years. That's how many apartments they're building. And it's not just here, it's everywhere. There was something that changed in the building code. I think I've talked about this before, like at the congressional level or something. Or it was something that went across, I think, all 50 states, to where you could build with wood frame up to 5 stories. And then all of a sudden you see all these 5-story mid-rise wood frame apartment buildings going up everywhere in the last few years. And they all look the same. I looked at pictures of like new apartments in Austin, Texas. They look exactly the same as they do here. And yet rents just keep going up, no matter how many of these things they build. I guess because they're attracting a haughtier clientele. It doesn't make much sense to me. I mean, I shouldn't say that. I mean, economics always explains these things. I mean, if the supply is increasing rapidly and the price is still going up, that just means that, demand is increasing that much more than supply, and, blah, blah, blah. The price would have, skyrocketed even more if they weren't doing all this building. But honestly, I don't believe that so much. I think that there are other factors at play. But according to Powell and from other metrics that we're seeing, it does seem like rents have plateaued a bit, that it's becoming a little more difficult to fill these vacancies, at least on a national level. I fully expect housing prices nationally to begin declining before they do in hot markets like Florida. So there's a lot of up in the air still. We are in a time of flux yet again. We're in a time of uncertainty, and I've been saying this for years on this channel. I just want to rip the Band-Aid off. Can we just get it over with? I still curse Powell for what he did back at the end of 2018. We could have had this all over with back then. We wouldn't have had to go through all this pain. We're going to go through more pain the longer you wait. The bigger the bubble gets, the bigger the crash will be at the end. So, with all that said, I will see you folks back here tomorrow.